Yeah. Congratulations. Taking the lead for your everybody. Prince. Everybody. Bring it to me. We're gonna. I love that.
Yes, I look at feet on the street.
Just look. Okay. What he gonna be? Never get enough water. Mike's.
Okay. I drove her all over London too.
Blood testing this morning.
And I didn't help, huh?
No.
Okay.
And I sent the text that this is gonna happen. Bam, done.
I don't work on baby. Because you know, baby problem.
And I said both of those because it's gonna happen. I just don't know what time. Give me some leeway.
I can't say.
It's probably gonna happen either this day or this day. What's gonna happen now? I'm just gonna take it in the morning. Done. Done.
You don't have the energy to volunteer and work with difficult people. That don't come together. Volunteer.
Alexa off.
Yeah, that don't work.
All right. 1, 2, 3. All right, ladies and gentlemen, welcome to our team meeting for May 5th. Absolutely. Taylor Williams premiere in the building. I love to see all your smiling faces. Thank you all for showing up and supporting everyone in Zoom land. Thank you all as well. All right, so we got a really good team meeting today. We're going to be going over a very big topic that's going to be pretty much all of our buyers in this market are going to be having some credit issues. So we're going to dive into that. But before we get into that, we're going to go through our normal spiel. First, of course, your phones need to be silent. Please be respectful for our speaker and everyone else. So we're trying to get as much information as possible. And I'm going to go back real quick, because I don't know if you guys know, but I wanted to introduce her. She's not up here, but this is our new agent services back in the back, Miss Ramona. Please give her a round of applause. Miss Ramona. Hello. She will be helping you guys where y'all need it to add some extra support to the market centers, but I just wanted to give her a little kudos. All right. So again, our phones, if it goes off, you're going to charge $5 for Cares for Kids. It's a great charity. 100% of your funds will go to the kids, straight to the kids. We love that. I'm not going to have y'all read this one because this one's is sort of long, but it hit me because I'm in a place in my business where I sort of get stagnant, right? I'm doing the same thing that I have been doing, and I understand that I need more systems and everything so I can break through my ceiling. So businesses that grow by development and improvement do not die. But when businesses cease to be creative, when it believes it has reached perfection, which I do not, and needs to do nothing but produce no improvement, no development, it is done, right? So we always need to be working on ourselves and always working on our people. That's what some of us did up in London. I love that. Y'all worked on yourselves as well as your business. That's what we do here every day. We absolutely need to be working on our business because the market's going to be changing, the information is going to be changing, and our messages need to be changing. All right, this is our mission statement. Let me see, who do I want to? Miss Kim Burley, I need you to read our mission statement up there.
Is to build careers worth having.
Yes, ma'am. Absolutely.
Experiences worth giving and legacies worth leaving.
Thank you, Ms. D'Amica. What is the most important part of that to you? Oh yeah, I'm coming to you. And I know what your answer should be, but I'm gonna let you answer. What's most important up there for you? Yeah. Absolutely. And that's what I thought it was. We all are going to be leaving legacy. I am Okay, I mean that's fine. That's fine, but you got to have you want to share that life with somebody. You want to share that with your children, your offspring, your okay, I'm with you. Now they're in a different part of their life, as I said, so it's a little different for them. Yeah. They immediately jump. We gotta live this life now. I understand. But everybody's in a different place. Personally, of course, y'all know I got my baby girl, so is everything I want to do is essentially give it to her, my legacy. That's what drives me. That's my why. All right. So again, if you guys don't have your preferred vendors list, please ask Princeton. He has it downstairs. This is just a value proposition that we at the Market Center provide for you guys. Y'all can just easily have that conversation. Hey, look, do you know somebody who's looking to do any of the services that we provide? And then you can always connect with people that way. So please ask for Princeton if you don't have that. And this is a list of some of our preferred vendors. I am personally using Team Pest USA. I use them over somebody else who didn't answer the phone and shouldn't make it. I don't remember who it was. I don't want to call them out, but I called them and they couldn't show up for about 2 weeks. Well, somebody, I guess it was, but guess what? They in the same business and they came 2 days. So how important is new business to you? And y'all need to be treating y'all business like that as well. If someone raised their hand, well, hey, look, let's pay attention, right? Not to say old business is bad, but new business is always, we got to cement that. All right. Congratulations to our cappers. We got Svetlana. We got Brianna Lee in the back. And we got Yashlin. Very, very hard workers. I will say, yeah, absolutely. All three of those are hard workers. You're not going to see the two on the ends, but you will see Bree. She's always in the office, but that's sort of forced. I know that if she could be, she'd be out there getting it. So congratulations to y'all for capping 100% of your commission checks. That's a lovely thing. All right. So without further ado, we have our main people coming in, Mr. Neil and Mr. Bill. You want to give him an intro or? Absolutely. Let's give him a round of applause, people. Thank you. Right there. Done. Oh, they can still hear me.
They'll get set up here. What would it be like,
Thank you.
You gotta go. Think about it. Everybody just there is no credit issue. I have to come up with another reason why they can't. Just think about that.
Yeah, so go on the side if it can reach. Yeah.
I talk to a lot of customers, and one of the biggest things is credit, especially when the market gets down. Life happens. It's a part of the reason why the market is down. So life happens, and you get all these credit issues. I believe personally that I can fix anybody's credit with a little bit of time. I think I've seen enough credit reports. I think I've seen enough situations where they're starting to repeat themselves. My problem is bandwidth. As big as I think my heart is, as much as I want to help every single person and guide them through it, hold their hands and walk them along the way, and put their feet on my feet and hold their little hands up, and we're walking all the way down to where we get this house. I can't do it. So how did I fix it? Neil works for a company called UQUAL. And what I love about them is not only do they do credit restoration, they do it for the mortgage industry. Because fixing your credit, you can fix your credit. But there's another issue when you're talking about getting credit ready to purchase a house.
Mm-hmm.
And it's totally different. So many times people can do something really simple and it'll have impacts way down the road in the mortgage side. So I want to introduce you guys to Neil Williams.
Mm-hmm.
I just call him
Good memory.
Mike.
Yeah.
But this is awesome. He's going to tell you guys a little bit about his company. I stand behind UQUAL. I just do. And it took me a while to get there, actually.
Mm-hmm.
Neil's been talking to me. I felt like, I don't know. I've heard of credit repair before. I've heard all these horror stories about credit repair and all this kind of stuff. But I've seen these guys at work. So if you pay attention for just a few, make sure you get all your questions answered before he leaves. A lot of these customers already have been forward it to them. Let's sound them up and we're restoring their credit. So
Yeah.
with no further ado, Bill Williams.
Thanks, Billy. Hey guys, good morning. Oh, we got some, hey, clappers. Hey, I never get clappers. That's awesome. All right. It's funny, Billy and I didn't compare notes, but I was going to say, like, so Billy's team, all of Southeast, like he said, it took time to vet us, right? Process took over a year, and just kind of starting out with a handful of loan officers, seeing what kind of work we did to get your buyer's mortgage ready, and then eventually they opened it up to the whole Southeast team. So, and Billy was a great part of that from the very beginning and giving us a shot. So grateful for Billy, grateful for Southeast, and grateful to be here with you guys today. We're going to talk about credit. This will be primarily educational. We'll talk about the do's and don'ts of credit. I'll talk a little bit about what our company does and how we help your buyers get mortgage ready, of course. But really, the goal of this class is to answer any questions that you have related to credit. Obviously, I have slides that I'm prepared to talk about here. But if I don't get to a single slide because I'm answering your buyers' questions about credit, things you see in the field, or questions you have for yourself about your own personal situation or a family member situation, that's a successful class in my book. So that being said, if you have a question at any point, please don't hesitate to interrupt. I know we have some people on Zoom or Teams. I don't know if somebody's monitoring the chat or something, but if you guys have questions as well, we'll either here in this class or afterwards, we'll make sure to get them addressed. So with that, let's dive in. Credit, just like any other topic, we got to talk about our why, right? Quentin was talking about his why is your daughter, I think he said, right? Your daughter. I've got a 1-year-old daughter myself, so that's definitely a big, thank you, sir. So that's definitely a big part of my why. But why credit? Why have a class about credit? Why is it important? As you guys probably know, your credit score impacts your mortgage in a big way, right? Going from a 620 credit score to a 760, in terms of what that does to your interest rate and what does to your private mortgage insurance, your PMI, usually equates to hundreds of dollars a month on your mortgage payment, easily over $1,000 a year in savings. Which if a 30-year mortgage, it's going to save you $30,000 over the course of your mortgage, easy. But it affects everything else as well. I'm not going to deep dive everything on this slide, but I'll take the one in the middle, auto loans, just because I've seen this impact your clients the most. I have the privilege of working for UQUAL for 6 years. I've probably looked at over 3,000 credit reports in my day. The number of clients that have an auto loan is a lot of them. The number of clients who have a bad credit score which are my clients, they usually have an auto loan interest rate of in the 20s, right? 18% is very common. 22 to 24% is probably the most common. The worst I've ever seen in my day is 36% on an auto loan, which is, I don't think in Georgia is legal. There's other states that allow that, but here it's considered predatory lending. When you have that bad of an interest rate, and just for comparison, if you have a good credit score, like I just got an auto loan a couple months ago, 5.75% interest, right? So these clients are paying 5 times, 6 times as much for the same car. When you combine that bad interest rate with what we call the term, so how long that auto loan is, my clients aren't getting a 2-year auto loan. They're not getting a 3-year auto loan. They're getting a 5, 6, or 7-year auto loan to make that monthly work, right? Now, when you combine that bad interest rate with a 5-year loan, it usually doubles the cost of the car, right? So they drive off the lot buying a $30,000 car, they're going to pay $58,000 over the life of that loan. And what that does to their monthly, which is that's where, if you have bad credit, that's where you're living is your monthly, right? You have a $600 monthly car payment. On average, $300 a month is going towards interest, just going straight towards the bank's pocket. And just like a mortgage, that interest is front loaded, right? So they're paying $600 a month, but $590 of that might be interest. So during that first year, their balance goes down almost nothing. So I've seen lots of situations where clients paid $7,000 in a 12-month period, and their balance only went down $300. So that's how people get upside down in their cars and things like that, which all kind of goes into this narrative, like you kind of get stuck with bad credit once you're in it. The other thing I'll talk about on this slide is the salary on the right, just because I feel like this really shows that credit is more than just the numbers. It's also impacting other areas of your life. Like to get an apartment these days, A lot of places require a credit check. I know some of you guys like help your clients with like property management type stuff, and you probably see that firsthand. Or even to get a job, like our loan officer friends, to become a loan officer, they look at your credit. They want to make sure you don't have $80,000 of bad debt and you're going to be a huge fraud risk for for mortgages, right? So it's something that they look at and can impact all those kinds of things. This talks a little bit more. Oh, any way to make it bigger, brighter? Let's see if I can. That's as max as I can get it on my computer. Well, while you're working on that, I'll just kind of describe. So I'll take the one on the left, auto insurance. This is a big one that I feel like really is eye-opening. For the same coverage, right? We got the same car, the same accident protection. We've had the same number of accidents. Somebody of great credit, so north of a 720, might be paying $1,500 a year. Oh, that's much better. Man, you're the man, Princeton. He's getting me logged in. He's helped me set up the laptop. That would have taken me 10 minutes. Easy. So yeah, you got your auto insurance. You see the $1,500 if you got great credit. You got bad credit, you're going to pay over $3,000 a year for the same coverage, right? Credit card debt, same thing. The math of it's pretty easy to see. It's almost triple for the same credit card balances. You're going to pay almost triple the amount of interest. But with credit cards, I like to talk about time. In my practice, that's where I see it hit your clients the most. Is your clients are maxed out on their credit cards if they have bad credit. And usually in that situation, they can only afford to pay the minimum monthly payments. Well, what happens when you do that? Let's say your monthly payment's $500 a month. The bank is going to add $482 of interest to your balance. So your net balance decrease was only $18 that month. So that's why people get stuck in credit card debt forever. And that's if you don't make a new purchase, if we don't go on a family vacation or buy Christmas presents next year. So when I look at payoff scenarios, like how long to get out of credit card debt if we keep going the way we're going, it's usually 8 years for your clients to get out of credit card debt if they just pay the minimums, right? But what's really powerful about credit is if we can change that math just a little bit, and we can help these clients with budgeting and help them pay an extra $100 a month extra or an extra $200 a month extra, it dramatically decreases that payoff time. We can get that down from 8 years to 2 years with just a little tweak. And if we can help clients with budgeting even more, help them pay an extra $500 a month, well, shoot. Yeah, now we're looking at getting out of credit card debt in less than a year, right? So, and that's what your clients care about the most because they're trying to buy that house yesterday, right? They don't want to buy a house 8 years from now. They want to buy a house ideally yesterday, but hopefully tomorrow. So that's the problem. Your credit score costs you a whole lot of money. For most clients, between your mortgage, your auto loan, your auto insurance, your phone bill, you're usually looking at over $500 a month. The difference between bad credit and great credit. If you're high income, bigger spender, we're getting like an $80,000 auto loan instead of the $20,000. I mean, you're probably looking at saving over $1,000 a year between your house, your car, and all that stuff, or $1,000 a month, I should say. So that's the problem. What's the solution? Now let's get into building credit. So the first one on the left, really big one, where we should keep our credit card balances. This is 30% of the score just right there. It's how you use your credit cards. So sometimes clients will tell me like, hey, I've got bad credit, but hey, what's going on? Oh, I've got these student loans. The student loans are what's hurting my score. And I'm thinking, usually that's a misunderstanding. That they see the big old balances of the student loans, like, hey, that's why I'm at a 550. And I'll tell them, your $2,000 of credit card debt is hurting you way more than that $80,000 in student loans. So how we use that credit card debt is very, very important. If we were to just Google online right now, where should my credit card balances be? It's probably going to tell us, well, any brave souls, I bet some of you know, 30%. That's right. See, because that's what's online. So we all know it off the top of our heads. But what the credit bureaus don't tell us is to really squeeze out every possible point. We want to keep those balances below 6%. Yes, right. What is that? 1/5 of what the internet is telling us. And who does that matter the most for? Because you will get some points by having your balances below 30%. There's milestones to this, right? But who does this matter the most for? Your buyers who are on the cusp of qualifying. You got somebody at a 626 credit score. They need a 640 to get ready for a down payment assistance program with Billy. We need 14 points. Well, maybe getting those 14 points is coming from being very precise with our credit card balances, right? So that advice could make the difference on the real estate transaction. So yes, that's what's one thing we do is we coach clients on those balances to make sure that we're getting in line. The next, make sure we're doing at least one payment on the credit card. I need to change the wording on this. Basically, you need to use the thing. You need to use your credit card in order to build credit, because you get penalized for being maxed out, having bad balances. You also get penalized for having no balances. You know, if you have a $0 balance month over month over month, it's not the perfect way to build credit. And then on top of that, if you don't use the card at all, usually 4 to 6 months, they might shut the card down for inactivity. And then that could really dramatically hurt your score. Keep accounts in good standing. Hey, that's the number one thing for your credit. Pay things on time. Yes, ma'am. Octavia.
For you, if you have a new credit card.
Best way to use it. My perfect clients are going to make me happy if they do this is if they just hook it up to a small subscription that they're already using. Let's not get something new. But hey, you're already paying for Netflix, but you're using your debit card. Okay. Put just that one thing on the credit card and then tear that sucker up for all I care. Like, don't, maybe you want to use it for emergencies or something that's a true emergency, but that's like perfect is let's just use it for something small. Let that balance report, pay it off. That's going to be a great way to, and auto pay. Yes. Yes, Miss Ma'am in the back.
Yeah. So, I was doing this before I started listening to him. He's saying that he makes seem like credit is bad.
Mm-hmm.
And you said that because I was doing this, paying the charging small things on it and paying it off.
Yes.
Some of my clients the same thing. But then listening to Dave Ramsey, he kind of confused me. I'm like, okay, will I keep the credit cards or will we cut them up?
Yeah. Good question. And I sometimes people in the mortgage industry or adjacent to the mortgage industry give Dave a hard time. I grew up listening to Dave Ramsey. You know, I went to a Christian school. They actually offered the Financial Peace University as like a class, which, man, I wish every high school did that. That was a huge advantage for me growing up. And Dave is brilliant at getting people out of debt. I think that's his really big strength is consumer behavioral thinking and really getting into the psychology around debt. That's why he tells people to pay off the smallest debts first, even though that doesn't make sense math-wise. But you do the smallest debts first because our brains are wired for that dopamine of when we pay something off. Hey, I just had success. So that's Dave's brilliance. When it comes to mortgage and credit, the reality is like you have some cash buyers, but some clients are going to need mortgage financing. And to do that, you need to have a credit score. Like if you don't have a credit score, Billy's going to try and pull it. He's going to get what's called a thin file error, which means there's not enough data for us to even generate a score right now. And that's a real problem if you're trying to get a mortgage. So to answer your question more directly, like you can cut the card up if you're afraid that you're going to use it, but don't shut the card down. You know, if you want to set it up through a small monthly subscription, so it's still staying active and it's not closing on you, but then don't call the bank and be like, hey, I'm done using this credit card, because that's the thing that's going to hurt your score. And some clients don't need to cut up the cards if they got some self-control and they can really just use the thing for emergencies. But some people do. And like most of those clients are pretty honest with me. Like, hey, I've got 16 credit cards. I'm like, yes, ma'am, I know, I can see it on your credit report. I've got 16 credit cards. I'm somebody who kind of uses them in the past. It might be a good idea to cut them or put them in the freezer. You want to go really old school or, do something like that. But that's a good question. You don't put them in the freezer. Yeah. Be like the Confessions of a Shopaholic movie, if you've ever seen that.
So
Yeah, no, I love it. Keep the questions coming. I love it.
A subscription on there and just have a zero balance every month.
Yes, let it report though. And that's kind of, you get into these timing tricks with credit, because like your statement date might be a different date that your credit card reports to the bureaus. So, Capital One might be due on the 28th, but they always send their information to the bureaus on the 7th, for example. And so if your balance is 0 on the 7th, then that's always what's going to report. So yes.
What date that was reported, and so you're like, you're on that date, you want there to be some charge on that account, and then 10 days later pay it off or whatever.
Yes,
You can time that.
exactly. Yeah, so you can go and, yep, they're all different, and they could even be like, if we both had Capital One, and I use the 7th as the example, you might have the 9th, and I might have the 7th. It might be based on when you opened up the account. It could be completely different. But yeah, but to your point, ma'am, yeah, like my bill's due on the 7th, it reports, or it's not due, but it reports on the 7th. Maybe I set my auto pay up on the 9th so that I'm never having a zero balance reporting. Yeah, so it's not running late. Yeah, so that's also, you don't want to do that. Yeah. So on the flip side, don't use more than 10% of your credit card. Don't apply for a bunch of new stuff. Let's talk about that. Applying for debt hurts your score, even if you don't open up the account, right? So we see this all the time with auto loans. The client goes to the car lot, they're thinking about buying a car, but they don't go through with it. Well, shoot, now they have 20 credit checks on their credit report, and that can really ding their score. Same with any other account. And then once you actually get the account, that can hurt your score too. It's called a temporary account penalty. Usually lasts about 4 to 6 months. So just in general, and you guys are probably already doing this, like, tell your clients, we got to be really careful about opening up any new accounts while we're trying to get a mortgage, and like send them to Billy, or if they need some serious help, Billy will send them to me. But before we go opening up a firm bill, let's go talk to some. Yeah.
You're so quick to figure out which lender they want to be, and then they say, well, you can look at different lenders.
Yes.
Or
Ooh, we get into some spicy questions here. Yeah. There's so much bad information about this, so I'm glad you asked that question. So we call this the shopping window. And just like you said, hey, can I pull my credit multiple times without it hurting my score if I'm going for the same thing? The shopping window does exist, but it is limited to time. Each bureau handles it differently. Some of them go into that 30 to 45 day range, and some of them only go into 14 days. So I keep it really simple with my clients. I'm like, I don't want you pulling your credit more than once in a 2-week period. Or I don't want you pulling credit outside of that 2-week period, is what I'm saying. Because we
Only like just shoot for that 14 days.
Yes, which our loan officer friends appreciate, because also we don't want the client shopping a bunch of lenders when it's not helpful, right? Like, obviously it's their mortgage. It's the biggest transaction they'll probably do in their lives for most of us Americans. So I understand you want to find the best thing. But for my clients who I serve, in the 500s, I'm like, you don't need to have 8 different lenders tell you no when you already got a really hard no. Like, that's just all that's going to do is hurt your credit, right? Now, a person with an 800 credit score, they want to talk to 2 or 3 of their best lenders. That's a different story. But like, it doesn't make sense most of the time. Yes, ma'am.
14 days. What do you say?
Yeah, I didn't phrase that well. You can do it as many times as you want inside that 14 days. Yeah, just don't do it today and then do it 15 days from now. I wouldn't, because what if that was the bureau that was sitting at a 641, you pull credit, now it's a 639. And if that happened to be what's called your middle score, which is the one that lenders use, well, shoot, now either you don't qualify or you're not getting the best interest rate that you could have. I wouldn't risk it, especially if I'm on the cusp of qualifying. That's who it matters for the most. I feel like I missed a question earlier. Did I miss somebody over here? Did you have one, ma'am, earlier? Okay, I saw you raise your hand. Yes, sir.
So person is purchasing it through their business.
Mm-hmm.
the LLC or S corp.
Okay.
Is that separate from the individual, or do you still pull that individual's finances regardless of what the business is doing?
Yes, business credit. Business credit's kind of a enigma. That's also misunderstood. I'd say for most people, their business credit and their personal credit's identical. Just because most of us, like if I were to start my business today, so if I made my own UQUAL, I'd probably be backing up my company with my own personal assets. I'd be the personal guarantor for the business. And so they're going to use my social for it. They're going to use all my information. And that's most people. You know, now if you own Coca-Cola, is that probably going to be a different story for you? Yes. What was your question? I don't think I addressed the heart.
Owner's credit, and regardless of if the business has great credit, but the owner has bad credit, it's going to take the owner's credit.
Yes. Yes. Yeah. So, and this matters a lot. Like we help a lot of truckers who are trying to buy their first truck, and like that can, depending on what kind of semi you're getting, that could be over $100,000 easily. And the difference on that interest rate could be the difference between them running a profit that first year or running a loss that first year. And when you're starting, as Quentin probably knows, starting any business, you might not be profitable that first 12 to 24 months, you know? And so that profit margin really matters. So, but yes, it's affected by the personal credit. Yeah. Awesome, guys. Let's see, it's 11:30. What time do we start, Quentin? I want to make sure. I forgot to make a mental note of that. Okay, cool. I will try to keep this around an hour for you guys. So now let's talk about, so we've talked about payment history a little bit. That's the biggest section of your score. You need to pay things on time. What happens if you had a mistake in the past? What can we do going forward? So let's talk about collections. So this is something that's gone so late, they sell it to a third party to try and collect on it. Late payments stay on your credit report for 7 years. And it's like clockwork. If I go late today, it's going to fall off in 2033. Collections are a little bit different. They still run for the 7 years, but they go from 7 years from the date of last activity, which is an important nuance. So a new activity could be when that collection was first sold to a third party. So Capital One credit card sells it to LV&V Funding, debt collector. That's a new activity. LV&V Funding tries to collect on it for 2 years. They're doing the spam calls. They're doing the, I'm going to send the sheriff after you BS. And then 2 years later, they're like, we didn't collect any money. Let's sell it to ABC Collection Company down the street. That's a new activity. Then the one that really gets your buyers is whenever they make a payment on a collection. That's a brand new activity. It can make that debt look brand new. So like one of the worst things you can do for your credit is you got a $2,000 collection, but you set up a $50 monthly payment plan for the next 3 years. Every single month, that's going to be looking brand spanking new on your credit report. And that's why collections can stay on your report kind of indefinitely. I've seen people who've had collections on the report for 20 years just because it kept getting refreshed every 4 or 5 years. So what can we do instead? Well, one option is some collection companies, not all, offer a pay for delete, which you see on the right. And just like it sounds, it's an agreement saying, hey, if you pay us, the collection agency, we agree to delete this from your credit report on all 3 bureaus. Sometimes they'll even give you something in writing called a deletion letter, which just spells that out. This is as good as gold. You know, this is, if a client can get this, we always recommend taking it unless there's other moves we're having them make. But this can be a great way to improve your credit if you can get a deletion letter. The problem is not all companies do it, and I'd say most don't. So one of the things we do here at UQUAL is we advise clients on their collections. Let's say they have 10 collections, but only 2 or 3 of them offer that pay for delete. It's important that the client strategizes and prioritizes the things that are actually going to help their credit. So we help advise on that. Another thing you can do with your collections, and part of what we do is we give clients a tool to challenge erroneous items like late payments and collections and potentially get them removed from their credit reports. There's been a number of different studies on credit, and they say different things, but somewhere between 40% and 70% of all credit reports have errors on them. So like in this room, that's a good chunk of us. Some of us probably have inaccuracies on our credit report. there's a law called the Fair Credit Reporting Act that requires every creditor to have 100% verifiable, accurate, and complete records on all your different accounts. So translation, I tell your buyers, the burden of proof is not on you, Mr. and Mrs. Buyer. The burden of proof is on them, the banks, the credit card companies, the collection agencies. If they don't have perfect records, they have to delete the item that's hurting your score, like a late payment or collection, off of your report. So it's a great law. The only problem was they didn't really give a way to enact it or mobilize it very well. So that's where we come in. Our dispute platform, the client just clicks a button. It says, hey, we want to challenge this using the legal teeth of the Fair Credit Reporting Act. From there, our portal handles the rest. It sends the disputes out to all 3 bureaus and gets those things removed from the reports when they're erroneous. The benefit for your buyer, whatever point they lost from a erroneous late payment or collection, when that item gets removed, they get those points added back to their credit scores. So it helps them recapture those points. I'm gonna get super technical for 2 seconds, but it's important. There's lots of companies that help out with the disputes. There's a way, and Billy kind of hinted at this earlier when he says these guys not only know credit, they know mortgage credit. There's a way to do disputes that doesn't actually get the item deleted. It just puts it in like under dispute status. So it's still there on the credit report, but there's just a little remark, a little footnote that says this is being investigated. That is no good for mortgages. And I'm sweeping with a broad brush, but in general, we can't close a mortgage transaction with that kind of language on there. We need the thing actually deleted from the credit report. So I know that's a little complicated, but I'll just like make sure you're partnering with somebody who understands the difference. And that's why Billy and Southeast took so long to vet us and make sure that we understood that, and we proved that. So that's why we're here. Okay, let's get into this. This is one of my favorites right here. This one's a little spicy. Any brave souls? How many of you use platforms like Credit Karma right now? And I'm myself included. I use Credit Karma. So yes. I like to say my marketing team got a little spicy on this next slide. They say, stop using them with a big X. I'm a little less aggressive. I like to say, use Credit Karma for what it's good for. It's free intel. Where else can you get live updates on your balances and your late payments and collections for free, right? Not a lot of resources like that. But as you guys know, it's not your real mortgage score. It's like the Zillow of credit reports is what we like to say. Yes, I know. That was like a know your audience type joke. Thank you. Thank you. So with this topic, though, comes probably the number one question we get from buyers is, why is my Credit Karma score so different from my mortgage score? You know, I'm a 650 on Credit Karma, but Billy ran it and it's a 570. Billy must not like me or something. So we're going to get into that. I'm going to give you probably more ammo than you could ever need for this question. It's one of those questions where I don't know if the client will ever be emotionally satisfied, but we can at least do our best to answer it. I like to start with this. Your credit score is a lot like your smartphone. Right? What is a smartphone at the end of the day? It's just software, right? It's just computer code, ones and zeros. Same thing with your credit score. All the different scoring companies are using the same data. So the balances, late payments, collections, et cetera. They just have a different way of processing that data into a score. And there's over 50 different scoring algorithms, one for each industry. You know, the mortgage industry, auto loan industry, auto insurance industry, homeowners insurance industry, you get it. So at its core, it's just different smartphones doing different things, to go for our analogy. And then just like your smartphone, there's different software companies, but there's also different software updates, right? I've got an iPhone, but it's not the same iPhone from 2002 or whenever they came out. I've got an iPhone 11 because just really slow to adopt the new stuff. But we've got an iPhone, what's 17, the most recent one? Same thing with your credit score. There's FICO version 2, there's FICO version 8, there's Vantage version 3, etc. How this affects your clients in practice, I'll have a client tell me, hey, I've got a 650 on my FICO score. Well, my first question is like, where are you seeing your FICO score? Because if it's not the right FICO score, then if it's not the one that the mortgage companies are using, you might be looking at a newer model of FICO than what the mortgage industry uses, right? So those are some ways to explain it. some clients will say, but why? How are they different? So let's get into that. The one on the left, Vantage, that's basically your Credit Karmas of the world. So if you get your bank app on your phone, that's probably a Vantage score. A lot of different places use Vantage. The one on the right, FICO, the Fair Isaac Corporation, that's what's used by the mortgage industry. Some of the differences, the biggest section of the score is payment history. So with Credit Karma, that's 46% of your score. With mortgage, it's 35%. Credit utilization, so how you use those credit cards, 30% of your score here, but it's only 18% on Credit Karma, right? So it's almost double weighted for the scoring algorithm. So some different examples there. Credit Karma will also look at different balances besides credit cards, so it kind of gets a little bit muddy there. But the ones I really want to double click on the most, because to me these are the most jarring, are in the bottom right here. Credit Karma does not score any late payments that are older than 2 years, whereas a mortgage score goes back 7, right? So think how many buyers went through a divorce 3 years ago. You know, they lost their job during COVID 6 years ago. They got furloughed, whatever. Their Credit Karma score would have recovered, but their mortgage score would have gone down a lot more. Any medical collections on a report are not scored by Credit Karma, but they are for a mortgage score. Now, in the mortgage world, you probably heard we don't care about your medical debt for the balances, right? You've got $80,000 in medical loans or collections. That's not going to keep you from buying a $300,000 house versus a $350,000, but it does hurt your score, right? And then any collections under $100. We've talked about this, but paid collections, right? Your client's doing what feels like the right thing. They're trying to pay those collections off, but they're still on there. The Credit Karma score would be adjusted to be a little bit higher, but the mortgage score would be a lot different. That's why it's not common to see an 80-point difference on Credit Karma. Somebody had 40 late payments 3 years ago. Well, yeah, it's older than 2 years. Credit Karma is not looking at 30 late payments. Yeah, there's going to be a big difference in the mortgage score, right? So those are just some of the differences there. Any questions about credit so far? Yes, sir.
I heard they're going to start using rent, Netflix payments. There are other things if you don't have credit that you can incorporate to improve your scores. Would that apply to both? Would you have to submit them to both, or do you submit to one entity and it, carries across all of them?
It will affect both scoring algorithms. And these are live right now. Experian Boost is probably the most popular one on the market. My thoughts on reporting rental history, I've been doing this 6 years. I can maybe count on one hand how many times I advised adding rent to a credit report. And here's why. We're usually not doing that for score reasons. If we're trying to get score improvement, there's other things we can do, like get a credit card, pay down a credit card, settle a collection, delete a collection. That rental history is not improving your score all that much, so it's just not worth the time and effort to do it. Now, when I do advise on adding rental history, and this is very nuanced, but sometimes a lender can do what's called supplemental credit, supplemental trade lines, where we kind of get creative. They don't have a lot of credit, so we can get some creative solutions on there to help push this loan through when they don't have a lot of credit. But that is very, very rare, and I would always talk to the lender first before I would recommend that, because that's starting to get out of my wheelhouse and starting to get into mortgages a little bit more. So all to say, it's an option. Just for what we do, it's not usually the best option, is what I see. Yeah. I'm going to touch on each section of a credit score real quick, and then should be able to kind of start to wrap things up a little bit for you guys. I want to be respectful of time, but so this is the mortgage score on the right. Completely ignore the one on the left. Payment history, pay stuff on time. Oh, yes, ma'am. Yes.
Clients ask us, why my Credit Karma score so different from my mortgage score that Billy pulls in. What's something that we can say that is going to simplify it for them rather than, overwhelm?
Yes.
So it's something that we can say back that simplifies how we can explain it then.
Yeah, because this ammo is really just for if they push you. But what I would start with, to your point, is the simple, which the most helpful I've seen is like, hey, there's different types of credit scores for different types of loans. And as you can imagine, Mr. Buyer, a $300,000 house for 30 years is a totally different risk than a $30,000 loan for 4 years on a car. Most clients kind of connect with that. They're like, oh yeah, I get that. A house for 30 years is different from a car for 4 years. So there's just different types of scores out there, and like just kind of keep it that simple as a couple of sentences. Most buyers don't push back on that pretty hard, in my experience. Yeah.
Different in like the history versus the payments versus the.
Yeah.
Yeah. Like an auto loan might not care that you were late on your credit card 12 months ago. They're like, well, you're going to pay us and pay your mortgage before you pay your credit card. So we're cool. You know, they look at it differently. Yeah. So payment history, pay things on time. If there's erroneous information, you can dispute it. Collections, you can try and do a pay for delete. Credit utilization, keep your credit card balances at that 5%. Length of credit. This section kind of gets ignored a lot of times in game plans, but this is about 85% of, or 85 points of your score. So still a big bucket of points. This is how long your accounts have been open. So it's only looking at your open accounts, and it's calculated as an average. So if I've got a credit card that's been open for 3 years, an auto loan that's been open for 2 years, and then a personal loan that's been open for 1 year, that's 6 years of total credit history divided by 3. That's 2 years of average credit. Now, if I shut down that credit card that's been open for 3 years, now I just have the 2 and the 1 for an average credit history of 1.5. Right, so I just reduced my average length of credit pretty dramatically. And that's one of the biggest mistakes you can make, is like you have a credit card that's been open for 12 years and they shut it down. Everything else on your credit's been open for like 1 to 3 years. You just cut your length of credit history in half typically. So yeah, avoid those type of things. But on the positive side, yes, Billy.
Credit history.
Yeah.
Shut down, you start over.
It does. It looks like a new loan. So yeah, if you had it for 3 years, suddenly you lost a 3-year loan and you added a brand new one. So it's unfortunate.
The new ones add up, and it'll show the same open date, just a different.
Just a different name. So that would, in theory, like, shouldn't affect your length of credit. But if it's true new transfer, if a new account number, different open date, then that would hurt the score. So how to improve it? One strategy you can use, and again, we would talk to a lender first, is you can get added as an authorized user on an older credit card. So mom has a credit card that's been open for 12 years. She calls, adds you on it. Suddenly you have a 12-year-old credit card on your credit report. And so as long as she hasn't had any late payments, she keeps a good balance. That could be a good strategy. The reason I say we want to talk to a lender first, not to get super technical, but some loan products require a certain number of trade lines, number of credit accounts. So if in other words, the only thing on your credit report is an authorized user on your mom, an underwriter is going to look at that and be like, you don't really have a 660 credit score, your mom does. And you're just borrowing your mom's credit. So we need to actually build your own credit first, and maybe we can use the authorized user strategy. So can be a good fit there. Yes. Oh, we got 3 questions coming in. I think yours is up first, then you, then you. Yes, sir.
So I know the 50-year mortgage probably won't happen, but if it did,
Yeah.
would they use the same algorithm, or do you think it will be a separate algorithm for a 50-year compared to a 30-year?
That's a great question. I've thought about this a little bit. I would imagine they'd almost have to, because one would think your risk on a 50-year loan is by definition different from a 30-year loan, right? And that's the reason why there's a difference in interest rate, which you've probably heard all the stuff on social media from loan officers of like why they think a 50-year mortgage is a bad idea, because you're just going to pay so much freaking interest over the life of that loan. And it doesn't really save you on your DTI as much as you would think it does, is what I've heard from my loan officer friends. But I'm sure, Billy, you can probably comment on that. Like, yeah.
It's just an attractive product. It gets the mortgage, it gets the market.
Yeah. Just something you can sell, not something that's actually like, yes, if I'm trying to get a $350,000 house, but I only qualify for 300, a 50-year mortgage is not helping me get that extra 50 grand, you know? Yeah. And then I think you had the next question.
authorized user, I've been told that after so long, you should want to move them. Does it hurt them to be on too long as an authorized user?
No, what shouldn't hurt either one of you. And specifically on the person adding, so in my example, the mom doesn't have any negative impact from the kid. If the kid had 12 collections on there, mom doesn't inherit those collections. Only the kid inherits that one credit card. So no, it doesn't hurt to stay on there. Yeah, the only thing is like, if I'm mom, I'm not giving. Exactly. Yes, if I'm mom, I'm not giving my kid a physical copy of the card. You know, if it were me, right? ever. And then I think Octavia, you had the next question.
She doesn't have a credit card or anything.
Yeah.
Then my husband has a credit card that's like 18, 20 years. Thought about adding her to that one, but I also just got a new credit card.
Okay.
Credit.
Yeah.
Just building credit from him, from being authorized user on his card. Should I add her to it or should I wait a while before I add her to my personal credit card?
Does she have any credit right now? So that wouldn't be a bad thing. The question for the group, she has a 20-year-old thinking about adding her as an authorized user. But the card she'd be adding to it is a little bit younger, just opened it up. I'd say still do it. Because then when she can get her own card too, she'll have your card as the authorized user and her own card. That 1-2 punch, she might develop enough credit. When she goes to get an auto loan, you don't have to co-sign on it. That's why I like the strategy for parents. This can help you protect yourself, because we want to help our kids and help them get a car. But better than co-signing them is helping them build their credit beforehand, so we don't have to take that risk, right? Yes, ma'am, in the back. Yeah. Secure credit cards are treated the same way as normal credit cards. I'm sure most of you are familiar, but secure credit card just means you have to put your own money down to open it. And the trade-off is they don't look at your credit. So it's great for somebody who's building credit or somebody who's rebuilding credit, so that, you know, they have a bad credit score. They don't pull your credit, but you just pay some money down. It's usually $500 is very standard. We have a couple banks that we partner with that it's just $200 to open up the card. But that can be great for building credit too. Like, it's a great place to start if you don't qualify for a normal credit card. Open Sky is one that we recommend. You know, very low fees, and it's just $200 to get started, no hard credit check. And then First Progress, very, very similar, $200 to get started, no credit check. And usually, like, how we pick it is like, oh, you don't have bad debt with Open Sky? Great, do Open Sky. Oh, you have a charge off of Open Sky? Well, you're not going to qualify for Open Sky, so do First Progress. Like it can usually be that pretty cut and dry. Let's see. Going to go through a couple things for the rest of the game plan just really quickly. The other buckets, new credits, that's when you apply for new debt or open up new debt. That we talked about that can hurt your score. Credit mix, so this is your diversity of credit. So just having different types of credit accounts will help your score. So a mortgage, credit card, auto loan, those are all 3 different types of credit. So that's why, like, loan officers will say, like, hey, let's get the house now. You've probably heard the phrase, marry the house, date the rate. Let's get the house now, because just having the house will help improve your score, especially if you're a first-time buyer. And that's true. Like, we looked at scenario, 6 months later, their score went up 20 points. Nothing really changed in terms of their balance and number of late payments. The only thing that changed is they had a mortgage. So just even having that diversity can be good. So that's kind of like that's the whole pie chart and some improvement plans in a nutshell. But wrapping up here, I'll just tell you a little bit about what we do for some context. Whenever you have buyers, that'd be a good fit. You can send them to Southeast. Southeast has a lot of tools. They're actually one of the few mortgage companies that has put skin in the game for like their own people. Like, they have a whole internal team that helps with these credit scenarios. And I'll tell you right now, most mortgage companies do not have that. They might act like they do, but in terms of actually hiring, paying somebody X amount per year to do it, most people don't have it. So if your client's close to qualifying, Southeast has lots of tools where, hey, we just need to go from a 612 credit score to a 640. they've got a team for that, and they can coach the client and run simulators and do that very quickly. Whenever the client needs some serious help, 50 points, 100 points, 140, whatever, that's when they'll send it to me. What those tools look like, we've talked about the dispute platform, getting items deleted. The budgeting tool is one of my favorites. So our budget tool links up directly with your client's bank account. So we can actually get to the root of the problem, right? If I can help people save money and increase their cash flow, I always like to say credit is downstream from budget, not the other way around. If I can help you save an extra $1,000 a month with cash flow, we're going to start getting out of credit card debt very, very quickly. We help clients with identity theft monitoring, DTI tracking, so purchasing power, right? I want to make sure your client's not just getting ready for a mortgage. I want to make sure they're getting ready for their mortgage at that specific loan amount that's going to meet the needs of their family. So we track that DTI very much like a lender. That way we're all in line, like Billy was saying earlier. We want to make sure that the credit and the mortgage are marrying up nicely on everything. And then for you guys, we have lots of social media content for our agents. In the past, with a loan preparation company like us, the agents kind of typically get removed from the loop. Like companies like us typically only talk to the loan officer. We want to change that narrative where Billy and the Southeast team, whenever they refer a client, they can tag you as the realtor of record. And Billy, I can show you how to do that, but basically you're just putting in the realtor's email address when you send a referral. And that way we can keep Billy updated and you guys updated on the same time, because you guys are the face of the transaction. They probably knew you before they knew Billy, right? In most cases. So we'll keep you updated on your client's progress. And then also give you guys social media content in your portal as well. That's where you'd see the updates. You also see our social media content, our co-branded material, that sort of thing. If that's something you'd like access to, I'm going to be sticking around for a little bit. If you want to give me your business card, I'll make sure you get access to the content and all that kind of stuff. But yeah, the call to action, the ask, if you will, is send all your clients to Billy. Like I said, if they've got great credit, he's going to close them. If they got decent credit, they've got tools to help get them better. And if they're really far off, guys, nobody's ever a no. Everybody's just a not yet. Yeah, we want to turn these not yets. We want to turn your no's into not yets, your not yets into yeses. That's what I do in a sentence, right? So thank you so much for your time. I'll be sticking around, and we have food coming here in a minute. I'll be sticking around for a little bit for my next meeting. If you have questions on scenarios with your buyers, would love to help, and looking forward to connecting and working with you guys.
Well, I have a question.
Thanks, guys.
Can you hear me? Hello?
Hopefully I didn't go too far over. No. Okay.
Great.
So,
All right. So that was great information. He essentially gave y'all another resource. Y'all have to work with Billy to get through, but it's always good to form that relationship. So we appreciate that. We're gonna go really quickly because we have so Lone Wolf, as y'all know, is a lot like transaction tests. There will be classes on Scott Leroy Marketing. I suggest y'all go with Scott Leroy Marketing calendar, and they will teach you all about it. But on the 14th, you will no longer have DocuSign. So get all y'all's files, documents, everything was over. Yes, I agree. And it goes that, but y'all will do class. We do have Reminder Media. They're on.
Yeah, hey, can you guys hear me okay?
Our sponsor for our Cinco de Mayo festival.
Testing 1, 2. Are you there?
They don't see what. Take the no, not
Hello, can you guys hear me?
And I answer.
Nolan, are you there?
Yeah, I can hear you. Can you hear me? Testing 1, 2, 3. Hello. Testing. Hello.
Nolan, can you hear me?
I got you now. Can you guys hear me?
Absolutely, we can hear you. Fantastic. So, Mr. Nolan, we're going to get you set up here in just a moment so that we can see your your face and your lovely headset.
Beautiful.
Let's go.
Hey, before I jump in, one of your agents online, you guys couldn't hear there in the room, but Ava had a question, I think, before we moved on. I didn't want to miss that. If you're still there, Ava.
Hey, I appreciate that.
Well, thank you, Nolan.
Sure.
The people who are online, Quentin, are you listening?
I'm hearing you.
All right. The people online, how do we get in contact with UQUAL? Because we can't mingle with them in the hall over lunch.
So UQUAL is going to be something that you get via Southeast Mortgage. You'll connect your buyer or your client with Southeast Mortgage, get them prepared, and Southeast Mortgage would then send them over to you.
But he mentioned having a portal where we could post content. So we need a client before we can do that?
No, that's just you connected.
Yeah, I can throw my email in the chat.
Yeah.
At the end.
So he'll get your email in the chat, and everybody who's interested, y'all can reach out to him. And if anyone here, y'all have y'all business card, just give it directly to him.
Thank you.
You're welcome.
Awesome. Wanted to make sure we covered that. And then let me see if I can share my screen. I might need you guys to unshare. Let me see if I can just try it, actually. Window. I'll move this over here.
So we're here.
All right, that should be bringing my screen up. I'm not sure if you guys are still sharing or not. Let me know if that's cooperating for you.
Yep.
It's working? Okay, sweet. Well, then let's jump in. I know Jeff has lunch getting there. Is it already there or is still waiting for a couple minutes?
It's here.
All right, then we better move quick because I'm going to get some hangry people if I don't get this finished up so we can get some lunch. All right, so let me cover some things on how we can help you guys out. Quick introduction. If you're not real familiar with our company, we are called Reminder Media. We like you guys. We've been working with a lot of you guys for a long time. There are some new things, though. So just quick background. We've been open since 2004, 35,000 clients around the U.S. I don't say these things to be like to try to impress anybody, but more just to say, hey, we've been around. There's some proof in the pudding that we're not just, we didn't pop up 6 months ago or something like that. Here's everything we focus on. This is really the crux of this whole thing for us. Our goal is to help you guys close more deals and retain more business. We say that every single morning in our company meeting. That is our mission. Every data point we look at, guys, says if you want to do that effectively, relationship is still king. Okay? So here's a really simple way to say it. 2/3 of all sellers last year and over half of all buyers either used an agent that they knew or got referred to. So we're not reinventing the wheel. We know it's the relationship. I want to just put this in context. So, because you guys could do all sorts of things on when you try to generate leads and get more business. If you guys were to look at the internet as a lead generating tool, so I'll give you Zillow leads, Realtor.com leads, Facebook, Instagram, Google searches, website, put all of that together. I want you guys to give me a wild guess. What percentage of sellers would you guess actually ended up using an agent that they found online in 2025? Give me a couple wild guesses. What would you guys say?
40%.
40%. Okay. Over, under, what about the rest of you guys? 10. Here's the answer. I think this is helpful because, right, when you're saying, hey, this is the GCI I want to end up with, how are you getting there? Where do those leads come from? It's 5%. Cinco de Mayo. Okay. So here's what I'm saying. I should just say this plainly. I think there's way more opportunity for most agents in their database. And one of the things I've been doing this for 8 years. I hear all the time is agents going, hey, I know my follow-up's not great. I try. I really do try. I'm busy. I'm tapped out. I got this. I got that. And so we're going, hey, if we can take some of the work off your plate and make sure they're getting something better than an email or a postcard. Nothing wrong with those normal things. It's just they get it from everybody. Can we do something better for the person who's handling the biggest transaction they have? That they deserve it. You will see that result. You'll see that they're sharing your name more often. They're coming back with questions more often. They got a friend that they want to send your way. We go into all the data. That works. That's a good formula. Okay. So the way we help with that is primarily through our branded magazines that have just put us on the map over the years. If you've heard of us, you've heard of American Lifestyle. There's actually 4 different publications that we offer. But these are personally branded magazines that you can gift to your client. I don't really care if they read the whole thing, just to be real with you guys, right? I'll level with you. Them reading one of our lawn and garden articles is great. That's not what makes you guys money at the end of the day. What we really care about is the visibility. Can I give them something even 3 years after the closing that they actually like, that they keep, that keeps you top of mind So when their coworker gets a new job and moves, your name is still on the tip of their tongue. That's the formula. Okay. So let me just show you guys one of these really quickly. And I should ask, do you guys have any, for those of you in the office, do you guys have any hard copies in the office by any chance?
Yeah.
Yes.
Oh, awesome. If you guys haven't already, if you could pass those around, I'd love for people to see them in person. But for you who are with me online, let me show you this. Anywhere you see Stacy, we're going to have your smiling face. It's very obvious who it's coming from, so they don't miss that. There's always like 30 or 40 cover options, so you can make the cover look really how you want there. When they open it, there you are again. There's a letter from you that can say anything you want, but just a little check-in, let people know you're thinking of them, appreciate them. Awesome. Then we do a couple of these tear-out cards. For those of you online, I'll just show you. It's just like a little perforated card. So one in the front, one at the end. It could be anything. It could be a recipe. That could be a call to action, an invitation to something. Tons of ideas on what you might want to do there, okay? And then everything inside is stuff that we know the clients like getting. Our team is really good with this. It's 48 pages. We don't sell any other advertising space to other vendors. It's just like, hey, this is going to feel like a gift. Even if they're not moving, this is something they like getting, they hang on to. And so it gives them the warm and fuzzies, which is what we want, okay? Let me skip to the very end here. One other thing I want to show you guys. The entire back cover inside and out is yours. That could be anything. It could be a listing. It could be a QR code. It could be reviews that you've gotten, list the local events to take the kids to, stats about the local market, whatever you want to do, okay? All of these little things we will help you with. So we'll give you templates. We'll give you an assistant. At the end of the day, I think the beauty of this is it is kind of, it's marrying the things that you want out of your marketing, right? It's repeatable, like the cheap stuff, like the newsletters and the postcards and the emails. You can do this frequently if you want, but it feels higher end. It feels more like, you dropping off a gift or something. I think it's scratching both those itches. So let me stop here. Obviously I can go into the pricing in just a moment. Talk to me, guys. What else? What other questions would be helpful in terms of how this works, or the timing, or the articles, or what else can I, or any feedback from those of you guys who've been working with us? What do you guys got there? Everybody's just thinking about lunch, huh? Is that where we're at? It's pretty good. It's about that time, isn't it? All right. Well, if there's no questions, I guess I'll cover the pricing there. Shannon, any comments from you?
So we do use you guys quite frequently. We're on like a schedule. We farm with you guys. We use you guys as a leverage tool, right? It's something that brands us, markets us without me having to think about it. So I appreciate that. I will say that we got 3 leads last week from the scan, the CMA, to see what your home is worth off of our postcard. So hopefully through the follow-up that we do, right, our SOPs, we'll be able to land at least one and have a 3-to-1 conversion. So I want to say thank you for that.
Awesome. Love to hear it. That's what we want. More deals in the hopper for you guys. That's awesome. Wonderful. Okay, cool. Well, let me cover pricing. You guys can let me know if there's any other questions, and then we'll get to lunch here. First thing, you commit to doing this one time. So I will just say, if you're sitting here and you're going, yeah, darn it, he's right. Like my follow-up has been kind of off and on. Try us. Like, get the feedback. If you like what we're doing, we have a new one every 2 months. Like you just heard, it's automated. Like, you don't got to worry about it. We'll take care of it. If you try this and you don't want to continue, you're not obligated to, okay? But it does give you something where you can dip your toe in the water, step your game up, and then evaluate from there. We charge per copy. I love this slide because it's crazy. We do the entire thing, the whole 48-page magazine. This thing is customized, printed. We ship it. We pay for the postage. All of that's included for $4.99. Come on. $4.99, which that's pretty good. Minimum is 50 copies. So we're going, pick your best 50 relationships that should be referring you more. You spend $250. It ain't going to kill you, right? You pay that when you're ready for these to be printed, which is usually in like a couple days, just so we can get it ready. And then the only other cost, we're going to give you guys a nice break on this for letting us jump in here, sponsor lunch and everything. The setup fee we're doing for $99. So usually when you sign up, you're going to see it at $2.99 on our website. Don't pay that. I'll put my info up in a minute. If you're interested, just let me know. I'll cut it to $99. That's a one-time fee. You never pay that again. And it gets you a ton of stuff. You get an assistant from my team that helps set all this up. You get exclusive rights of the mailing list, so nobody else is allowed to send it to the same people as you. And we even give you a bunch of creepy info. So whoever you're thinking of mailing this to, we've got like hundreds of points of data that show us how long have they been in the home, job changes, family updates, who had a baby, internet behavior, age, income. And then it says, hey, here's the people that you probably want to pay a little extra attention to because they're about to move soon. All of that's included with the account, as well as that landing page you just heard about that will capture leads for you, right? We put a little call to action with it, and then we'll show you anybody that visits that page so you can follow up with them. That's it. So 99 gets you in, 250 when we go to print. You try this one time, and then you get the feedback and go from there. I have one last bonus that I'll say, and then I'm out of your hair. What else? Any questions at all? Anything? I don't bite. Promise you. Anything else I can answer for you?
I have a question. As far as the articles are concerned, do you create the articles or shall we be creating the articles?
Oh, no. It'd be a lot of work we'd be putting on you guys. No, we'll take care of all that. The 4 different magazines just have different themes of the articles. So there's one that's more lifestyle, a health and wellness, a business. So you don't have to write any of that. We'll take care of that. But you can just pick which one of these you like and switch those as you go. Yep.
Hey, Nolan, to that effect, can you customize if you want something specific in there that's more in line with your branding? Can you customize an article or something like that?
Yeah, so we don't have you customize the pages on the inside for a couple reasons. One is it's a lot more expensive to do that. It's a lot more work to do that. And then sometimes they might not see it. If we put it on like page 13, it's like, well, they might flip by it. But that's why we give you all the most visible spots of the magazine to customize. So yeah, you want to put something local right on the back cover where they're definitely going to see it. Easy to do that. You want to put something on the tear-out card, an invitation to an event you're going to be at. Cool. So there's definitely space to do that. We just don't want to create like a huge extra project for you. So we limit it to these areas. Yeah. Good question. Anything else?
Another question as well. So when you start the program with the setup fee, all right? How do you have to make a decision on when you want to get started?
We try to have everything done within 30 days. I mean, it's really rare somebody takes that long, but it's fluid. So like sometimes people sign up and we're ready in 2 days. Sometimes they need 2 weeks because they have a closing that's a headache. So, that's stuff we can work with, but we try to have stuff done within a month. If you need more time, I mean, we'll work with you, but that's pretty rare.
Okay. Thank you. All right. Thank you, Mr. Nolan. We appreciate it.
You got it.
Of course, thank you for the food.
Of course. Let me leave you guys with one last thing really quick. That's all my info on the screen. So if anybody else has questions offline, feel free to shoot me a text or something. If you're like a new agent, there's a whole new agent program I could tell you about. If you're interested, do me one quick favor. Take your phone out really fast. Just scan that QR code. It'll have a little form you can fill out. Here's what we've learned. You guys are busy. You will forget about me. You got 10 other things you got to do. It's fine. The deal is if you put your info in there today or tomorrow, you'll get an extra 15 free magazines on the first mailing, and you'll get a free month of our entire digital platform that we offer. I won't even go into that now, but there's a whole digital platform you'll get a free month of. So there's our little, hey, don't procrastinate. Let us know if you're interested. We'll hook you up. But otherwise, I appreciate you guys. Enjoy lunch. Hope to talk to you guys soon, and we'll see who we can help from there, okay?
Okay.
All right. Thanks, guys. See you soon.
All right, fantastic. So we do have announcements that I know that we have gone over. I know everyone is excited about getting food. We have questions back. We're going to ignore that just for 30 seconds. What I heard here was 3 different ideas. Y'all can use this for a closing gift. Y'all can use this for people who are on the fence, or if you're doing events like me, y'all can absolutely have this to solidify you as the agent. And it makes you just look that much better because Cindy Lou Who's, she passed this around. It looks fantastic. It has your headshot and everything else. You look like you are $1 million. So use it in y'all's business if y'all can. If y'all have the disposable income to do so. Miss Shannon, what was your question?
So I just want to say this, since everybody grab their phones and kind of say, hey, I'm raising my hand, I want to start. So I'm going to say this very transparently. If you're not going to create a system around it and you're not going to do follow-up, please don't waste your money because all shiny things, it doesn't create business right then, and we're instantaneous people. The best thing that you can do, because I know the faces in here, to create business right now is getting your database. So if you don't have a system around follow-up, okay, then there's not a reason for you to be in that neighborhood marketing. Please don't go spend $100 now that's gonna work itself into thousands in a few months or so. It just doesn't make sense. Please do the Legion in the mornings or whenever you do it and get in your database, create the business release so that you can use this leverage.
Absolutely, absolutely. I heard their systems, follow the model. Now let's roll. So lead generation, absolutely. Cindy Lou, who? That's every morning at 9 a.m. I'm on the call. Cindy's on the call. Sheena's on the call. Just get there, do business. You're in a good community right there. We also have after today. Cindy
on my actual headshot.
The budget didn't allow for it. It's okay. Mandy's class is going to be after this. It's going to be 2 p.m. to 3, and she's going. Oh, okay, we're not doing it today. Okay, are we going to postpone that? All right, let's just move on. Great. And then you have Miss Sheena, PC coach, building a brand for realtors. She is very brand oriented. That's her thing. So please go to that class if you are trying to establish that brand. We also have new agent orientation for any agents who just joined us. Valencia, I mean, you might even want to go, Miss Ramona, so you know what it looks like. But upcoming in the 26th, we have Tony Robbins. It's going to be his company. They're going to send somebody. You have to be in person for this. This is going to be just pour into you. That's what he does. Huh? I said Tony Robbins' company is sending somebody. That's how I worded that. I did that on purpose. But this is a really big red day. This is Keller Williams signature day, the May 14th. We're going to be out in the community. And we absolutely need y'all to sign up. I'll be there out in the heat, sweating as usual. Yes, Miss Valenciaga. T-shirts, that's supposed to be handled by Miss Zena. I believe you need to get in touch with her ASAP.
I will send out an email so you guys can put your size and everything. Then we'll give you all the information for the thing.
Fantastic. Yeah.
It's Thursday afternoon, guys, for the t-shirt.
So 2 days.
2 days.
Or just wear a red shirt.
We do need help, guys. Sign up. This is a great event.
Absolutely.
If you're allergic to the sun, I have an event that's going to happen here in this room.
Allergic to the sun.
I've gotten that text already.
Yeah.
I'm allergic to the sun.
Y'all need to be
So I worked out event right in this room.
all right. So there is a way for you to give back. It is our give back day. So show up. Breakthrough 120. If your business is a little stagnant, Breakthrough 120, we're going to get you some business. That's essentially what that says. Let's get it. Okay. And thank you guys for coming. Go get you something to eat. Thank you everyone online. That was fantastic. That was great.
We have this. A lot of things.
What if it's Venezuelan? I want Colombian. Yeah. All right. I want some Guatemalan.
Things are all ready.
Oh, okay. I hope she feels better. Did they say that she had Streptococcus 74? Oh my word.
They did like a blood culture and urine culture and they're gonna send it off and see if she's got
COVID.
no, those kidney stones have just been killing her.
Again?
I think maybe it's an infection.